Good afternoon, ladies and gentlemen, and a very warm welcome to Cross Market Conversations webinar. The Cross Market Conversation webinar provides a platform for brokers, regulators, and investors engaged in cross-border capital market trading, and it is powered by SecondSTAX. The SecondSTAX trading platform connects you to African exchanges, giving you access to over 250 equities in Ghana, Kenya, and Nigeria, with a combined market capitalization of over 75 billion US dollars. Not only are you given access to these equities to trade via our platform, but the platform has a KYC portal for easy onboarding into any of these markets. It provides you with a news portal with feeds from all the leading business news shops on the continent. A research portal with insights from our partner brokers is also on for free, as well as a liquidity providers portal to facilitate a smooth and secure transfer of funds for your trading activities. In fact, cross-border trading has never been this easy. But today we have quite a bit to unpack on this webinar. So in the first sessions, we have representatives from our partners who will provide market color for their respective markets. So we'll be getting updates on market performance so far, what to expect for the rest of the year, sectors and stocks to watch, and the impact of global headwinds or tailwinds for that matter. Then in the second session, I will engage our expert panelists on the topic, the future of cross-border trading, innovations and capital markets approach in the AfCFTA era. So ladies and gentlemen, please buckle in as I invite Simbiat Bada. She's an equity trader with Zcre Securities in Nigeria to give us some color on how the Nigerian market has been faring so far. Please, if you have any questions during the presentation, kindly put it in the Q&A chat. We're going to make ample time to answer all questions that will come on during this webinar. So Simbiat, if you are ready, kindly unmute and take over.
Okay. Hello, good day, everyone. And it's an honor to be here today to speak to you on the trends we see in the Nigerian capital markets. But my presentation today will be more focused on market insights across the Nigerian equity markets. Can you help to this next slide? So this slide just gives a snapshot of all the instruments available on the NGX. We have equities, ETFs, bonds, mutual funds, mainly for visibility, and current market capitalization stands at 66 trillion, and that's a dollar equivalent of 642 billion. Next slide. So it's important to speak on the historical performance. So looking at 2023 and 2024, it's been an interesting run in Nigerian equity markets. We saw significant gains across these 2 years, and it's mainly due to the fact that we saw investors react positively to the market-friendly policies that the government put in place in 2023. So one of them being unification of exchange rates. We also saw the government discontinue subsidy in the downstream segment, and that helped free up funds for infrastructure spending by the government. And I mean, that these policies led to the positive reaction in the markets in the last 2 years. And comparing with the other SSC markets like Egypt, Kenya, and South Africa, we saw NGX ASI return 37%. Also looking at the breakdown of the performance, the sectoral performance, the oil and gas was the best performer, returning 158%. And that was largely due to the deregulation we saw that helps improve profit margins for discounters. We saw the likes of Oando, MRS, Conoil return over 100% last year. Eternal returned at 94%. Another sector that performed well was insurance. Insurance returned 112%, and that was on the back of the rally we saw when they announced recapitalization for companies in that space. We also had good performance from some of the consumer goods names like Boa Foods. Banking was up 21%, while industrial returned 31%. And so far this year, we also kicked off the year on a bullish note. In January, we saw continued by interest in sectors like banking, consumer goods, and oil and gas. And the optimism in the equity market at the start of the year was on the back of lower yields in the fixed income markets as we begin to approach H2. However, rates have remained attractive in the market, in the fixed income market, and that has sort of tempered down the positive sentiments in equity markets. Can we move to the next slide, please? So this slide just speaks on the dominant themes across the quarters in 2024. So for Q1, markets returned 31%, and this was due to the bullish run that filtered from 2023. So the NGX ASI surpassed 100,000 points. We also had a major listing, that's Transpower, which added 1.8 trillion to market capitalization, and it also returned 50% last year. But moving into Q2 and Q3, we sort of saw capital reversal in the markets where investors moved funds from equity into fixed income. And that was largely due to the rate hikes in the market. So due to high inflations, we saw MPR being hiked from January, which was at 18.75% to December to 27.5% in December. And of course, that made higher fixed income yields as well. So looking at the chart on the right, just shows movements with on the 1-year Treasury bill stop rate and the MPR. So looking at 1-year Treasury bills at start of January, it was 11.5%, and as at end of March, stop rate was 21%. We also saw secondary market yields on this instrument trade as high as 28.9%. So that sort of created bearish sentiments in Q2 and Q3. Another highlight for Q2 was, sorry, curious, can you still go back to the last slide? Yeah, so another highlight for Q2 was the financial performance. So we saw FX loss erode profits for companies like Nestle and MTN. And because they are large cap stocks, we sort of sell off in those names impacted the performance for the markets. Dangote Sugar and Nascon also had the major being suspended, and we saw sell-offs affect consumer goods, which in turn affected the markets for Q2 and Q3. In Q4, market returned 4%, and this was largely due to the banking capitalization that we saw. So a couple of banks came to the market to raise offers. We had rights issues, some did some form of private placement, and that activity also rallies in banking names. I also had the major listing in Q4, and that's Aradel, which added 3.4 trillion to market capitalization. Yeah, we can move to the next slide. So this slide just speaks on the mix, transaction mix for domestic and foreign transactions. Looking at Q4 total, local trades have continued to dominate markets. Yeah, 85% of domestic transactions being local players, while foreign at 15%. And we all know the importance of having foreign portfolio participation in the market. They help with price discovery, they help to deepen the market. But however, we've seen more of the FPIs play in the fixed income markets, and that's because of the attractive yields present there. Like I'd mentioned, I mean, yields on secondary markets for 1-year T-bills was as high as 29% levels. So we've continued to see a lot of carry trades in that side of the market. Yeah, can we move to the next slide? So this slide just speaks to our GDP projections for 2025. So GDP projection for the year is at 4.5%, and that is hinged on positive outlook we have for three major sectors. So for the oil and gas, we expect this to contribute 6.5% to the GDP, and this is due to our oil production expectation of 1.7 million barrels per day. And of course, this is mainly a reflection of the government's efforts towards curbing crude thefts and also ensuring that investments go into infrastructure development. For the downstream segment as well, given the deregulation in that space, we believe margins will continue to improve. Which will help attract investment into that space. For telecoms, the outlook is also quite positive. believe 5G expansion will continue to drive revenue growth for number of players in that space. So even looking at 2010, we've continued to see increase in smartphone penetration, which is around 44%. And given Nigeria's population, we believe that there's still room for further expansion, and this will contribute to driving the data income line for telecommunication players. And most recently, we saw the government increase tariffs for telcos. This will also support revenue and profitability for these companies. And lastly, we have agriculture. For agriculture, we've seen government efforts around taming insecurity in the major producing states in the country, which will result in um, increased food supply. We've also seen increased efforts to expand mechanized farming, which would help us increase the value we can have across the entire value chain of some of these crop produce, and in turn help exports competitiveness. So that's it for this slide. It will also be important to speak on the fiscal and monetary policy outlook. So for macroeconomic drivers like inflation, we expect to see that moderate in 2025. And this was on the back of the high base effect from 2024. I mean, 2024, we had a lot of factors that increased inflation level. We had Naira devaluation, increased power tariff, as well as high PMS pricing. So with the high base effect and also the rebasing done this year, we've already seen decline in the February inflation figure, which came in at 23.18%. And also looking at currency stability, um, we also expect currency to remain relatively stable, given the fact that the government will keep it attractive to further attract foreign inflows. So some of the macros look good, but we believe there are still some macroeconomic headwinds that we should be worried about. One of them is GDP, debt to GDP ratio, which is over 60%. Another is debt service to revenue, which is over 100%. I mean, that just means the government needs to drive revenue. But looking at some of our expectations for this year and looking at the looking at the real sector, we expect companies to begin to move into the profitability region, and that just means governments would have more taxable revenue, and that will somewhat improve these line items. Yeah, we can go to the next slide. So lastly, we're just going to speak on sector-specific trends that would for potential growth. So for us, we believe these are some of the key sectors that will do well in 2025. We have banking, consumer goods, oil and gas, and telecoms. On the banking end, we expect the capital expansion to drive long-term growth. We expect the attractive interest rates to support their interest income performance. We're also seeing moves by CBN to drive cashless policies, meaning that we'll see more transactions being done through banking channels, and that would support fees and commission income line. For consumer goods, some of the headwinds they faced last year was inflation, currency pressures, which have sort of started to ease. Looking at Q2 results for some of the companies like Nigerian Breweries, Nestle, Guinness, we've already started to see they're moving into profits region, and we expect that to filter into market performance this year. We all know that returning to profitability means the companies can now declare dividend, they have retained earnings for expansion, and all of that good stuff. For oil and gas, I've spoken deregulation, I've spoken upstream players being profitable in the back of the expected increase in oil production. So we have upstream players like Aradel and Seplat expected to do well, expected to improve margins, and that is one of the reasons why this is one of the sectors we should look out for. Lastly, telecoms. I've spoken on 5G expansion, data demand, increased tariffs. All of these should help increase profitability for these companies as well. So lastly, I'm just going to speak on portfolio allocation and strategies to put in place. So given the positive outlook in these sectors, that just gives an interesting view around having a diversified portfolio at this point in time. I mean, there are quite a number of companies in these various sectors that you should have represented in your portfolio. Another security that would help with portfolio diversification are your ETFs. A good example would be ETFs that track the NGX 30, and that just means you have access to the 30 most capitalized stocks on the exchange, which represents all of these sectors I've talked about: banking, consumer goods, oil and gas, and telecoms. And it's a lot cheaper to buy ETFs than having to buy those individual stocks, because one ETF gives you a basket of 30 stocks. So so that's just a strategy product that you can look into in this year, for this year 2025. Yeah, and that's
All
that's
right.
it. That's it for my presentation.
Okay. Thank you very much, Symbiat. That was very insightful, and I'm sure our audience's interest are already piqued in some of these stocks and sectors that you've mentioned to look out for in the Nigerian market. Once again, I'd like to remind all of us that if you have questions, kindly put them in the Q&A chat box. As I said, we're going to have ample time to deal with any question that anyone might have. So we will quickly pivot to the Kenyan market, and to help us with this insight, we have Anthony Kiambati. Anthony is a senior dealer global markets at Faida Investment Bank in Kenya, one of our partners. So Anthony, kindly unmute and take over.
Hello, everyone. Thank you so much for attending this session. I'm really excited to take you guys through the Kenya capital markets in outlook for 2025 with a focus on the equities market. So I think we can go to the next page. So for start, I'm going to give you guys color on the markets, basically a general outlook for 2025. First of all, I'd just like to mention on the surface level that the Kenyan equities market is actually poised for a cautiously optimistic year in 2025, and I'll give several reasons why. We have a mixture of both headwinds and tailwinds that might affect the markets. So let me just go through the three major things that we'll be looking at. First of all, in terms of economic growth, our GDP is expected to grow between 5% to 5.5%. And the key drivers will be strong agricultural performance, low inflation, and monetary easing. And going on to talk about monetary policy, I think it's important to mention that our central bank has been cutting rates. Actually, we have come from a high of 13% to around now we're at 10.75%. And if you have some understanding of how markets work, is that when you start having cutting of rates, this is usually very positive for the equities market. And so that's one of the factors that we see supporting a lot of bullish momentum in our equities markets. Some of the challenges that we're facing currently as a country, a lot of fiscal pressures, high debt servicing cost, and potential global trade disruptions. Basically, the common saying that the US sneezes and everyone else catches a cold. So next page, please. So let me do a quick breakdown of the factors that I mentioned. So let me talk about monetary policy and interest rates. So our CBK has been cutting rates. So we'll move from 13% to 10.75%. And this is expected to stimulate the private sector lending and therefore driving demand for equities. The next meeting will be next month. That's April, on the 8th of April. So watch out for that. Another factor that's affecting our equities market is actually the declining yields of government security, which we expect is going to encourage investors to seek higher returns in equities. Basically, we're seeing a shift in the theme from 2024. In 2024, I have to mention that we had a very attractive bond, which was an infrastructure bond, a tax-free bond, giving a return of around 18.4607%. And this caused a lot of shift from the equities market to actually fixed income. But what we're seeing as the yields continue to decline, we're seeing a shift from the fixed income market to the equities market, and we expect this to be a trend that's going to continue. So basically, what I mean by this is that expansionary monetary policy is expected to enhance liquidity and also boost stock market activity. In terms of macroeconomic environment, basically GDP is projected to grow at a rate of between 5 to 5.5%. In terms of our inflation has actually been ticking lower, currently standing at 3.5%, which is quite good because it's below the 5.0 midpoint. In terms of our debt level remains a huge factor of concern, noting that our present value of debt to GDP has reached a high of over 63%, which is above the debt ceiling of 55%. So this is another huge factor of concern, especially for people who look at fixed income and maybe even the euro bonds. Next page, please. In terms of government policy and regulation, so a key headwind for this year for the markets will be new tax measures. For the guys who might not know, we had the Finance Act of 2024, which led to deadly protests in Kenya. So we'll be watching closely what are some of the amendments that will be done in the Finance Act of 2025, which we definitely expect to affect our markets. On the positive end, we are seeing a lot of introduction of new financial products like derivatives, into brackets, options on futures and ETFs at the NSE, which we expect to enhance a lot of market depth and liquidity. So watch out for that. In terms of the global macro trends, I think monetary easing in the US will actually influence capital flows into emerging markets like Kenya. And we also expect the geopolitical risks, including the US-China tensions and a lot of regional conflict, to affect investor sentiments globally. In terms of corporate earnings and market sentiments, I think that this has already happened because most of the banks have announced their earnings in March. We expect, or ideally what we've seen is strong revenues from the banks and a lot of good dividends, which have basically higher payouts, which have boosted a lot of market attractiveness, especially for the banking sector. Next page, please. So I'm going to give you guys a quick highlight of the performance of our market in 2025. And please note that this is as of 21st of March. I don't have the latest figures, but we can just go through it. So as you can see, the NSE All Share Index is up 3.9% year to date, but this is an underperformance if you compare it to the benchmark, which is the MSCI Emerging and Frontier Market, which as of then was up 13.7%. So the theme for this year, what we're seeing is we're seeing a lot of outperformance, especially by the penny stocks. So the penny stocks, let me mention a few. So we have companies like TransCentury, which is up 228%. So basically over 200% year to date. We have Home Africa, which is up over 100%, and we have East African Cables, up 100%. If you go to the specific prices of these counters, TransCentury is trading at around 1.28 Kenyan shillings. Home Africa is trading at around 0.75 Kenyan shillings, while East African Cables is trading at around 2.17%. So I think this goes to show that what's happening in our markets is that we're seeing a lot of speculative trading around the penny stocks, and most guys are going to these penny stocks and actually sort of participating in the trading of these penny stocks, more of what I would call speculative trading. And this is a theme that has actually continued from last year, because we saw the same thing happening in 2024, where penny stocks actually led the entire market. So in terms of dividends, counters to watch out for, I think counters that are usually good for dividends, especially for guys who are not in our country. Let me mention Stanbic, Stanchart. So in terms of dividend yield as of yesterday, Standard Chartered has a dividend yield of 15.1%, which is quite high, especially in the banking sector. So we have Standard Chartered. So that's a counter you look for if you're investing for dividends. So that's Standard Chartered, and Stanbic, which has a dividend of 12.6% as of yesterday. Another counter I'd like to mention is NCBA. NCBA is still in the banking sector, which has a dividend yield of 10.5% as of yesterday. So moving from the banking, I think other counters you can look at would be Kengen. Kengen has a dividend yield of 12.8%. Another counter you can look at would be KPLC, which has a dividend yield of 10.5%. So those are notable names. And finally, I would like to mention BAT. which has a dividend yield of 13.5%. So I decided to focus on the 6 companies, especially for investors who like to invest for dividends. So Stanchart, and one thing I would like to mention is that both Stanchart and Stanbic actually paid out their highest ever payout in history this year. So those are counters you need to look at. So Stanchart, Stanbic, NCBA, and then Kengen, KPLC, and BAT. So notable names to look at, especially if you're investing for dividends. Next page, please. And next page, I think we're going to skip this section for the sake of time. So just go to next. 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 Okay, I think I've already talked about dividends. So go to the next page. And the next one now. Perfect. So talking about 2025 sectors and stocks to watch, let me give a quick recap of 2024. For 2024, the energy and petroleum sector actually outperformed with a return of 83.9%. And notable names in this sector would be KenGen and KPLC, that's Kenya Power. And the banking sector also performed well with a return of 49%. So notable mentions in this category will be Stanchart, KCB, and Equity. And also we had a lot of performance from the construction and manufacturing sector with notable names such as Bamburi, EABL, and BAT. So for stocks to watch out in 2025, I think I'm going to do this by sector. So in the banking sector, I think a key stock you need to watch out for would be KCB. KCB is a stock. I think one of the things I need to mention is that they sold their loss-making unit, that was NBK, last year. So this is a stock that we expect to perform really well in 2025. So KCB is a stock to watch, Stanchart is a stock to watch, Standard is a stock to watch, Equity is a stock to watch, and Corp Bank is a stock to watch. In the energy sector, KenGen and KPLC are key stocks to watch. And the main reason behind this is because we expect a lot of them to gain a lot because of favorable energy sector policies by the Kenyan government. So watch out for that. In the manufacturing and consumer goods sector, watch out for EABL and BAT. And in the insurance sector, watch out for CIC and Liberty. Next page, please. In terms of foreign investor activity, I think for last year, the top foreign net buyers were majorly in KCB and East African breweries. So that's EABL and ABSA, number 3. In terms of top foreign sales, we saw a lot of sales in Safaricom, BAT, Equity Group, and Bamburi. For 2025, we're seeing a lot of shift in the activity in the market. We're seeing a more local activity as compared to previous years. So we're seeing a shift in how the division happens. Initially, we used to have over 70% of the trading in our market being done by foreign investors. But what we're seeing at the moment is a shift in activity where local participants are actually accounting for more turnover compared to foreign investors. Next page, please. So as I conclude, what are some of the portfolio diversification strategies that you can use to make sure that you're well positioned for 2025? First of all, I think I would recommend an equities and fixed income balance. So basically, for the equities, you need to pick up the high dividend blue chip stocks, some of which I've mentioned, like Stanchart and Stanbic, and also mix that with some fixed income securities. Just to hedge against volatility. I think I had mentioned a good bond that we have in our markets, which is the IFB1 2024 8.5, IFB1 2024 8.5. This is an infrastructure bond that's actually tax-free and has a coupon of 18.4607%. So check into that. In terms of diversification, pardon?
No, sorry, please go on.
Okay, in terms of sector diversification, you also need to gain exposure into banking. So for markets, especially if you're looking to trade huge ticket size, I would recommend exposure mostly to banking because of liquidity. So take banking and the energy sector, energy sector, and the telecommunications, which in this case is Safaricom. So those are the major sectors you need to get into just to try and mitigate the sector specific risk. In terms of alternative investments, I think I had mentioned that in our markets, we're seeing a lot of developments. We're seeing a lot of new products, derivatives. Specifically, we only have futures at the moment, but soon we'll be having options, and options specifically options on futures. So look into that. We also have rates, and we have private equity funds, corporate bonds, basically just to try and get additional risk-adjusted returns. In terms of hedging strategies, it's important for currency risk mitigation, invest in offshore investments and USD-denominated assets that can help you basically caution against local currency depreciation. So in terms of strategy, it's important to adopt a long-term growth strategy. So make sure you have long-term plays and stick to, especially in our market, stick to the major caps, basically sectors such as banking and manufacturing. Finally, a dividend play. So stick to companies that pay dividends. And in this case, basically the companies that I've mentioned that have high dividend yields, the likes of Stanchart, Stanbic, Kengen, KPLC, and BAT. So in conclusion, the Kenyan equities market presents opportunity for growth. Despite macroeconomic and geopolitical risk, it's important for investors to adopt a diversified approach while remaining vigilant to policy shifts and global trends that may impact performance. Thank you so much. Kindly ask any questions you might have in the Q&A section. Thank you so much.
Thank you very much, Anthony, for that very deep insight on the Kenyan market. I think the good performance we saw from last year still continues. Looks like the Kenyan market is still one to keep an eye on. Once again, thank you very much for that presentation. Next,
sure. Thank you
I'll
so much.
next I'll invite Na Louisa Nelson from Blackstar Group in Ghana. Na is the head of research and capital market at Blackstar Group to give us the market color for the Ghanaian capital market. Na, kindly take over and share your screen and please go on. The screen is up, please.
Great. Thank you. Good afternoon, everyone.
Good
I hope
afternoon.
we're all doing well. Great. Yes, so as I
Hello, Na. We can't hear you.
global markets, asset management. Sure, just give me a second. Can you hear me now?
Yes, it's better.
Is better?
Yes.
Great. So my name is Louisa Nelson. I work with Blackstar. So Blackstar has a four-phase business: global markets, investment banking, asset management, and research. So this is just a snapshot of the Ghanaian capital markets with emphasis on the equity market. And before that, we just want to place a disclaimer out there, just in case you use this as investment advice, and we are not liable for that. So just moving straight into the equities market. So the Ghana Stock Exchange has made some good stride this year as compared to various exchanges on the market. So in terms of USD total return, that is capital appreciation and dividend payments. So we are up about 18.9% as compared to South Africa's 10, Kenya's 6.4, and the Nigerian's 3.4. So just looking at how the stock exchange has done in terms of the split between financial and non-financial stocks. Financial stocks are up about 38.6%, driven by companies such as or banks such as Axis Bank, TAL, and ETI. The insurance stocks are also doing quite well. Enterprise and SIC have done quite well this year. So this, as you can see, is the Blackstar Index, in-house built index used to track the Ghana Stock Exchange, financial stocks, and non-financial stocks. So looking in terms of sector, in terms of the total value traded on the stock exchange for the past 3 years, so 2023, 2024, and year-to-date 2025, we've seen that in terms of total value trading, mostly just two sectors are gaining traction. So the ICC Center, anchored by MTN Ghana, there are only two stocks in there, but it's mostly MTN that usually moves in terms of value traded. And then the ABSA New Gold ETF. That's the only ETF we have on our stock exchange currently, although there are a few ETFs in the works. These have move the markets in terms of trading. So we had 2023, we had about 818.2 million in terms of value traded, which 2x, so 2.7x in 2024 to about 2.4 billion, anchored by trading in MTN Ghana. But this year we've had the new gold ETF really rally in terms of trading value on the exchange. And we've just done about 12% of what we did in terms of value traded, in terms of that, what we did in 2024. So looking in terms of the returns across the various divisions. So we've had varying returns from various divisions. 2023 anchored by the agri sector, and we only have one stock in there, that is the benzo oil palm plantation, BOP, or the ticker is BOP. And we've had food and beverage. We had some distributions in terms of our petroleum companies, that's Oil and Total. And then MTN being the ICT, anchoring the ICT center, moving in there. In 2024, we had the new gold ETF pop up again. And maybe just going back a bit to 2023, we saw that the finance and insurance industries or sectors didn't perform as much. And that's because I'm sure you heard about what was happening in terms of domestic debt exchange. So it really hits these two sectors a lot. So we saw a lot of sell-offs in terms of those sectors, but we saw the finance sector really pick up in 2024, and that's because of the returns that happened on that front. But the insurance sector was picking up in 2024, and we've seen this year that the insurance sector, as I mentioned earlier, in terms of enterprise and SIC, have really picked up. But again, we've seen last year manufacturing anchoring returns on the stock exchange. But this year, distributions, because of Total's very good performance on the exchange, we've seen that distributions industry and insurance industry, as I mentioned earlier. And then we've seen finance industry really pushing there in terms of anchoring trades. But the question is, what really is market appetite, or what has it been before we look at what it is currently? So in terms of what it has been, we have seen, because again of the domestic debt exchange, which didn't just affect the finance industry, also affected equities and really and generally the Ghanaian markets in a whole. We saw a lot of sell-offs on the market. So you see red anytime you see red. Red is not a good color for our markets. So we saw a lot of, then these are stocks outstanding from the GSE in terms of sell-offs. So we saw a lot of sell-offs within this region. And then this anchored through, or this went through 2024. Even though we still had a good performance on the GSE, and we saw pockets of buy-ins in the Ghana Stock Exchange. But this year, the story has been different. We see green. We've had a lot of demand in terms of the market. So we have a lot of bids outstanding that need to be filled. So in terms of the start of this year, it's really kicked off to a good start. And we hope to see it even better through the rest of the year. So what factors have been influencing our exchange? So the debt exchange really put a turn in mindset of investors generally across, given people something else to think about, or the key word that everybody was speaking about was diversification. How do you diversify away from government? So the equity market was a new way of looking towards that, even though they weren't really powering through when the debt market was up and running. So heightened investor awareness because of post-DDP, because of the debt exchange. Then again, the financial stocks really kicked in, and the reason why one of the reasons why a lot of investors are looking there is because financial stocks are good stocks for dividend paying. And a lot of pension funds in there, aside MTN, they're good stocks in terms of CAL and the others that pay really good dividends and through that. So it's really affected our markets positively, actually. And then increased market participation through trading application. Now, we've had a lot of brokerage firms, and I must say, and quite proudly, that we're one of them that have introduced apps that make it easier for retail investors to invest. And ours is called Genie. You can go on Apple or your Android to get that on the Genie. It's called Genie. So these trading apps have made, or let me just use, since I'm Blackstar, Genie have made it quite easier for investors or retailers to participate in the markets, and they've brought even more transparency to what happens on a stock exchange. So it's not just in the hands of, hey, broker said, but they've made it quite easier for people to understand. And so our retailers are really being involved in trading right now. And then aside that, there has been increase in market liquidity. There's a lot of money in the market right now. M2 Plus is quite on the rise, and we see a lot of rejections in our T-bill market. So some of these monies are going into our equity market. So the next question is, how has investor participation in terms of whether foreign or local? And if you see the ASH stands for onshore, that is Ghanaian. And then our offshores, that's the foreign companies and the foreign individuals. It's quite interesting to note that averagely 60% or 68% of trades on our equity markets since 2021 has been as a result of trading with foreign counterparts. So foreign investors really do play a huge part. And again, Blackstar is a broker that can aid or yes, face foreign investors when they want to participate in our equity market. So yes, again, about 60%, 68% of trades have come from the foreign markets, and just a tad bit, just one or 2% in terms of foreign individuals directly participating in our markets. So just in conclusion, how is Ghana looking now? Just a short indication of the government's target in terms of inflation. Currently, we are hovering just north of 23, but government has been quite ambitious to lower the target from 15%, which was as of last year, to 11.9%. We are still trying to firm up the policies and the various execution of those policies to make sure that we get to this number. In terms of GDP growth, quite positive 4%. We've been growing quite well on the Ghanaian front, and whenever there's growth in the economy, we see growth in companies translating in growth in the equity markets. Primary balance target is about 1.5, and frankly, first in a while, we've seen government cut expenditure as opposed to the various happenings that we've seen over the years. So that's quite positive on our front, and that was a positive signal in the market. In terms of gross international reserves, north of just above 3 months, that's what government's target is, and that's quite. I think our reserves have been quite shored up for the past few months, because that has helped with a bit of the stability in the currency. So averagely in Ghana, over the past 10 to 15 years, the currency depreciates about 15% every year. But this year we've just done just a little around 5 to 6%, as at a few days ago. So in that front, we see a bit of stability in the city. And once our macros are improving and we're seeing positive signals from there, even our T-bill markets rates have reduced quite drastically to the teens. So in terms of how that looks like for the Ghana Stock Exchange or equities in general, well, continuous innovation will drive growth. And particularly, we see the apps keep coming up, and various financial securities innovations, ETFs being put on the market and the likes. So once we see those innovations, we expect that people will participate in them. The GSE is doing a huge push on various listings across various sectors in the market. So once we see more stocks on the market, we're sure that people will participate, and then cross-exchange trades for dual-listed stocks on the market. And that's one of the reasons why SecondSTAX is really a good influence in the markets, and we are a partner to SecondSTAX in terms of trading. So all in all, we expect that the equity markets will continue to pick up in Ghana. So if you have any questions, yes, at the end of the presentation, so we'll be glad to answer that. So over to you, Daniel. Thank you.
Thank you very much, Na. Once again, thank you again for this the presentation on the Ghana market. Please keep your questions coming. We are making ample time for that, so let's have all the questions. We're going to fill them. We'll have our experts fill them, as well as our analysts from the market have a go at all your questions. Next, we are going on to the meat of today's program. the panel discussion on the topic, the future of cross-border transactions, innovations and capital markets approach in the AfCFTA era. I have a very distinguished panel here. I'll just introduce them briefly, and then I'll ask them to unmute so we can go down into this topic. I have with us Nkechi Akunili. Nkechi is the CEO of AccessView Africa. She was a former regional treasurer for West Africa at UBA Group. She played a key role in crafting and running several initiatives that supported cross-border trade with regards to payment. Since leaving the banking industry, she has, through her company AccessView, focused on enabling sustainable local business on the continent through capacity building, ESG compliance, human development, etc. Her company, AccessView, is a transacting partner agent and liquidity provider on the PAPS marketplace. PAPS is one of the innovations that we'll be talking about in a bit. Next panel is Winston Nelson Jr. Winston is the CEO of Amber Securities. She's had more than 2 or 3 decades in the securities business. He's also currently the president for the Ghana Securities and Industry Association, and he is a member of the West Africa Capital Market Integration Council. Then we have Mrs. Emily Mburu Ndoria. Emily is a director, trading services, investment, intellectual property rights, and digital trade at the AfCFTA Secretariat. She has over 20 years of work experience with international and regional organizations. Her initiatives at the AfCFTA Secretariat providing technical, strategic policy leadership and facilitating the implementation of the AfCFTA agreement, especially in the protocol, trade in services, investments, IPR, and digital trade areas. She started her career at UNCTAD in Geneva. She's also worked with COMSA and the SADC Secretariat, and she also lectures at the WTO Regional Trade Policy course for English-speaking countries. And then finally, we have our own chief economist in the person of Benjamin Boakye. Benjamin is the chief economist at SecondSTAX, and he also heads the research division of SecondSTAX. Ladies and gentlemen, you are all welcome.
Thank you very much, Daniel.
Thank you, Daniel.
Yeah. Ben, let me start with you. Can you maybe give us a state of play with cross-border trading at the moment, and how on the African continent especially, and how it's been impacted by global headwinds or tailwind?
Yes, definitely. And thanks again to all of our listeners and panelists for joining us. So I'll take that question in 2 parts, because you're seeing quite a bit of activity and transformation on both sides of this thing. First, the cross-border trade in goods and services, which has been impacted greatly by the AfCFTA agreement and operationalization, and then cross-border trading in the capital markets. So for the past few years, since AfCFTA was operationalized, you saw this kind of begin right as we were coming out of COVID. So you had a very interesting mix of activities going on there that certainly disrupted the baseline that we were all looking at. But what you had was, in 2020, a very massive hit to cross-border trading, to intra-Africa trade, due to the pandemic. Right after that, in early 21, you saw AfCFTA sort of get switched on. And then you saw a rebound from the 61-ish billion in intra-Africa trade that we saw in 2020 to over 107 billion in 21. So that was a very massive increase. And that momentum has kind of carried through. So you're now getting very close to the 200 billion mark in intra-Africa trade. So I think that's a very interesting piece of history to remember, which is that coming out of the pandemic, you had that rebound. So we're always going to have to tease that out when we look at the numbers, but that the momentum has continued. So you are getting that positive signal from the start of AfCFTA. Now, re- well, very quickly, regionally, it's a little different. Southern Africa has done quite a bit more work in terms of the infrastructure to facilitate cross-border trade, and the rest of us are kind of catching up. So when you're looking at the markets, you're definitely looking at the corporates and the decisions they're making down south, and up north, it's more a bit of a focus on the public sector and how the governments are putting in the work to facilitate cross-border trade and so on. But I'll leave it here for now because we have
Sure.
a much more qualified panel to take up from here.
Thank you very much. And talking about qualified panelists, let me switch to Mrs. Emily Mburu Ndoria. She is right in the midst of the AfCFTA Secretariat. Emily, so 7 years down the line after the initial agreement was signed by 44 countries, currently I think 54 have signed, 48 countries have ratified. Can you just take us into AfCFTA a little bit, help us get a real sense of what AfCFTA has been doing, how the journey has been so far since it was signed? Has AfCFTA expanded market access? Are we unlocking the investment potential that was all expected to be part of the AfCFTA package? Hello? Is Emily on? Okay, I think we've lost Emily briefly, and we'll make contact with her again. But Ben, let me just come back to you on that. Can you just help us with that in the question I've just was posing to Emily? I think you were going on a bit about it, but just help us get a sense of how AfCFTA has grown over the years since the agreement was signed and ratified. Briefly.
Yeah, definitely. So what we've seen is that one, for the most part, yes, the signal that's coming in, the statistical data and the anecdotal data since more closer, 2023 and beyond has been very positive. We see that there is a growth, as I mentioned earlier, coming off of that post-COVID rebound. So we are seeing, anecdotally and statistically, a dramatic increase or a significant increase in intra-Africa trade. But beyond that, the quality of trade is improving because we see that intra-Africa trade tends to be more value-added trade. You're doing a lot less of just the transfer of raw commodities, which we all know benefits the economies in a much more muted way than getting that value-added trade, right? What we see from the manufacturing sector down in the southern part of Africa, coming out of Nigeria, for example, their most recent consignments of AfCFTA trades, you're really seeing manufactured goods, and that is really providing a boom to the economy. So definitely, it's not just the fact that we are seeing a significant boost in intra-Africa trade. We're seeing a much more qualitatively positive change in the mix of trade, and I think that's really what the capital markets are going to lock in and focus on going forward.
Okay, all right. Thank you very much, Ben, for that. I think talking about intra-African trade, one of the organizations or the innovations that is going to help move that is the Pan-African Payment Settlement Systems. I think as of now, it has about 51 commercial banks across the continent onboarded with about 15 central banks, all as partners of PAPS. Nkechi, let me throw this to you. I think in recent times, we've been hearing a lot about PAPS, the ability to send money from one country to the other in local currencies, etc. Can you just take us through PAPS and how PAPS has been, operating, and how have PAPS changed the game in terms of payment services on the continent?
Okay, thank you so much, Daniel, and thanks SecondSTAX for putting this together, and thanks to for having me on board, and hello to your listeners. Yes, there is a second school of thought, which I actually pride myself for being the chairperson. That says until we have economic integration and independence, we've not gotten our independence in Africa. And that is because of the challenges we've had in the fact that we've not been able to really trade amongst ourselves, and that's why I had championed. I was very excited when Africa came on. The Continental Free Trade was supposed to close that gap. And prior to that, the main challenge why we were not doing that, apart from the trade barriers, is really a bit of settling those payments. And that was how come when Continental Free Trade, when AfCFTA started, there was need to actually have a settlement platform to make sure that currencies are settled. Even the 10% before then, now we're about, depending on where you're getting your statistics from, we have about 15 to 17% intra-Africa trading amongst ourselves on the continent, when you compare that to the total trade that we do on the continent. Even that, before now we had 10%. Even at that, we were settling each and every one of those trades in foreign currencies. And you can imagine how that impacts negatively on our various currencies across the continent. So you're talking about every time you're seeing Ghana cedi, Naira, shillings depreciating, it's because of the pressure we keep putting on our currencies. Hence, when PAPS came, even when I was in UBA, I had to, like you rightly said during my introduction, we went to central bank because then Ghana companies that were exporting to Nigeria were having challenges getting payments, and Nairas were piling up in Nigeria. And I said to them, we're going to get approval and sort this out for you. And that was what we did. So we took their Ghana cedis, their Naira in Nigeria, and gave them Ghana cedis for them to start trading without waiting for the time for the banks to get the USD at the time. That is actually what PAPS is coming in to do. And it's been a very exciting period, because working with PAPS as one of their the partners. And of course, we also have SecondSTAX as our partner on PAPS, and it's quite, and we've opened people's eyes to the kinds of opportunities that we have. In those days, you sit on, even banks will have to wait for almost like two months before they get foreign currency. But today on PAPS, what PAPS has done is to be able to engage airlines through most of the partners. We are here talking to those airlines to be able to settle their currencies that they have across. So a Kenya Airways, for instance, that has a lot of Naira, is willing to take Kenya shillings in their country as in exchange for the Naira. And all of that is happening on the PAPS platform. So it's really at a reduced cost. You don't have to do dollar LC going to the US and coming down to Africa for you to settle a payment. So it's really something that has been profound, and I applaud PAPS for the good work they've been doing.
Great. Thank you for that. So just a quick follow-up on that. We all have one story or the other about the risk of doing cross-border trading on some of the other platforms, so to speak. Can you speak to us a little bit more about, how secure transactions are with PAPS? And then also, perhaps, if you can touch briefly on the real impact in terms of volumes and values for intra-African movement of funds since PAPS, took off.
Okay, so because it's really very interesting, you bring up the bit about security. because that is really what we are trying to solve for a lot of people. What happens today is that for the cross-border trades, you see people, especially small businesses, actually carry cash across the borders to be able to go and trade. I was funding, we had a meeting with some of my, one of my clients that we are trying to raise funding for. And he was actually saying to me, oh, in Cote d'Ivoire, we import the cashew from Cote d'Ivoire, and when they come there, we pay them cash. And I said to them, I'm on the PAPS platform as a liquidity provider. What we need to just do, and that will give my investors the confidence, knowing that your transactions are passing through the banks to do this. One is that PAPS is very safe. Of course, AfCFTA is the mother better than. So it's really the safest platform that you can actually do business with, as against carrying cash or giving it to one malam that you don't even know when he's gonna
yeah.
And because that's what is happening, today as on the street. So most of the corporates, first and foremost, because that's where we had to start from, to just educate them on how safe. And when we initiate this transaction, it's actually into PAPS accounts that we're doing that, and then we're helping you facilitate your payments on the other side, on the other country currency.
Yeah.
So
Thank
it's
you.
really something that's safe. Yeah.
Yeah. Sorry for cutting you on that. Thank you very much, Nkechi, for that. Winston, I'll be coming to you in a bit to talk about the West African Capital Market Integration Council and the work you guys are doing on, integrating the West African Capital Market. But I think I have Emily online now. Hello, Emily. Do I have you here?
Yes. Hello. How are you?
Fine, thank you, and great to have you on board here. So, we were looking for you to tell us about AfCFTA. 7 years after you took off, how has the journey been so far? Are we really expanding the market access? Are we unlocking investment opportunities? Have the custom processes been made more smoother? Kindly take us through the journey of AfCFTA since it was signed 7 years ago.
Okay, thank you very much. Let me start first by thanking you for inviting the AfCFTA Secretariat. And on behalf of His Excellency Wamkele Mene, we are really, really happy to be part of this panel discussion today. And just to say also that your topic is really a very good topic. When we talk about the future of cross-border trading, looking at issues of innovation and capital markets and how it relates to the AfCFTA, it really makes us aware that a number of people, stakeholders now are getting to understand more on what we are doing here at the AfCFTA. Having said that, and coming back to your question, so far, we've been able to do quite a bit at the AfCFTA. And when I say the AfCFTA, I mean the Secretariat plus the member states, how the system works. This is a policy organization. And so our member states, that is the governments, are really important. So we've been able to kickstart implementation of the AfCFTA through the Guided Trade Initiative. And as the name speaks, it's the Guided Trade Initiative. So we were trying to assist member states to utilize the instruments of trading under the AfCFTA. And I can say to a certain extent, we have been successful in doing that, because then member states could understand how to use, now when I say member state, it means also the private sector, because they are part of the whole member state architecture. And most of the private sector then were able to use the rules of origin certificates and to see how then those certificates are accepted in different countries. You had the 7 countries that started the whole process, and now they have increased significantly, with about 39 countries showing interest in being part of the guided trade initiative. And so what His Excellency Wamkele Mene has informed through the Council of Ministers is that we may not need to continue now calling it as the guided trade initiative, but now it is really state parties, as we call them under the AfCFTA, that will be now implementing the different protocols of the agreement. Having said that, then now it moves to the other protocols that that we have been able to develop, and that is the protocol on investment, protocol on digital trade, protocol on competition policy, the protocol on intellectual property rights, and also the one on women and youth in trade, so that we can bring in the issues of inclusivity. And from all that, you can see how important your topic is and how then important this issue is in general. Yeah, back to you.
Okay, thank you very much, Emily, for that. So just a quick follow-up here. You know, many a times for most people, AfTA is more about goods and services. You know,
yes.
How should the capital market position itself to be able to support the growth of cross-border trading or take advantage of the AfTA framework?
Okay, let me put it this way. Capital markets or securities markets, as we used to call it more in the older days, is part of trading services, the protocol on trading services, and it also falls under what we call financial services sector. So under financial services sector, you have the banking, you have the insurance sector, and then you have the securities or the capital markets. So they are already covered, and they're a significant part of the agreement. And maybe to say that there are a number of countries that have actually made their commitments to liberalize or to open up the sector, so that different players from different countries in Africa can be able to move and provide this kind of service across borders. And the lady before me was speaking quite eloquently on the issues regarding PAPs. PAPs is one of the tools that the AfCFTA is using to ensure that we are able to do the cross-border trade that we have. And as you are aware, we have already 54 countries and that are signatories of the agreement, and we have 48 that have already ratified the agreement. So that increases the market that then we can have even for capital markets. And in the financial services sector that I was talking about earlier, we have then developed the regulatory framework. And the regulatory framework is really key for us because it will assist in terms of harmonizing financial regulations across the continent. And when I say financial regulations, it's in all the different sectors and subsectors of financial services, including the capital markets. It will help us also with the operationalization of the PAPs itself. And of course, we are working closely also with PAPs to roll it out into, let's say, all the countries that are already that have already ratified the AfCFTA. Then if we link it also with our investment protocol, and the SME inclusion, then it brings on board more players, and in particular, the small and medium enterprises that we need to encourage to utilize the opportunities that are under the AfCFTA.
Thank you very much for that. I think you mentioned, harmonizing the regulations across country, and that will bring me to Winston. As part of their work, Winston is a member of the West African Capital Market Integration Council. And Winston, I figured that you guys might be doing a bit more about looking at the regulations in your bid to integrate the capital markets of West Africa. Maybe you want to tell us a bit more about WACMIC, how that journey is also going, and when should we see or when is the go live for the integration of the West African capital markets?
Thank you very much, Daniel, and a very good afternoon to everyone listening. Daniel, so just a little correction. So I am not a member of the council. I am the chair of the technical committee, and I'll explain why that correction. Because the WACMIC, as the name sounds, it's the West African Integration Council, Capital Market Integration Council. The members are the CEOs of the exchanges. So there are 4 exchanges within the group: Bolsa in Cape Verde, BRVM in Cote d'Ivoire, the Ghana Stock Exchange, and then NGX. So that is the core that makes up the integration council. Then for the exchanges, and then the council has the CEOs of the CSDs of the same markets. And I'm sure anyone familiar with capital markets know that these two have to come together before you can achieve any form of integration. So those are the members of the council, and then I just chair the technical committee where we do the technical work. So a little about this group. You can find more about it on if you Google wacmic.com. There's a website for the group, which is wacmic.com. The ECOWAS Charter, and because you have people who are outside the region, ECOWAS is the regional body for West Africa. So the ECOWAS Charter provides clearly that there has to be, there was the goal as one of the articles that there should be integration of capital markets within the West African sub-region. So it is based on this principle or this article that the exchanges and the CSDs have come together, and we've been working on this project for some time now. And it's a few years older than AfTag, but we are happy that AfTag, which is more continental, has gained traction. One of its key things, which is PAPS, would be one of the tools that can help us also achieve the regional integration that we want to achieve. The model is simple. We are looking at the integration from two main streams, two main angles. One is to facilitate securities trading. So whether it's equities, bonds, anything listed on the exchanges. So that is on one hand. Then the other leg of the integration goal is to allow issuances, so capital raising by companies across the region. So these days, once this project becomes operational, you expect that if a company opens an offer, let's say in Nigeria, it's not only limited to Nigeria. Once you get approval, a regional approval, you can open the offer simultaneously in all the participating markets, which currently, like I said, this is the 4 markets. And then, of course, the securities trading leg. How far have we come? So we have worked over the years to make sure that the rules are harmonized. We have the framework done. We have the rules are harmonized. We've actually managed to, of course, the Integration Council is formed, which would oversee the process. We are also lucky enough to get our regulators to form an association because they would approve anything we do. The Regulators Association is the West African Securities Regulators Association. We call it WASRA, and that is in place. It's made up of the regulators of these 4 markets currently, and that one is also in place. The model is how we would do it is also in place. Now we just need to sort out the infrastructure and then the cash settlement leg, and that is why I mentioned PAPS. The idea is that if you have a broker who has been approved by one body in Ghana, it doesn't need to go and get established or approved in another region to trade. They would just apply for a regional passport, which we call a common passport. They would just apply for a regional common passport, which we call QAPs, actually, Qualified West African Broker for the trading side. And immediately that is approved, and that's why the regulators coming together is important. The securities regulators, immediately they recognize it. You are automatically admitted into their market. So a broker in Ghana gets a regional approval, is immediately admitted into the 4 markets, and it can just sit in its country of jurisdiction or origin and then trade into these markets. The CSDs have a model to do the security settlement. So unlike how if you want to trade currently, you probably have to get a partner in another region and open a CSD account, etc. You can use your own CSD account in Ghana. If you're a broker in Ghana, you can use your CSD account in Ghana to trade Nigerian securities, and it will be reflected in your CSD account. So that is how far we have come in terms of the trading infrastructure, in terms of the security settlement. But now we are working around the cash settlement, because you know that the cash settlement is not that simple. The volumes involved or the values involved can sometimes be huge. So naturally, we have to make sure that in terms of the regulations, the central banks, the securities regulators, etc., are aware. They have approved it, and then we can so that we can start the process. We are currently in talks with PAPS to see if that will be they can play the key role in terms of the settlement. Some of our members, like the BRVM, are currently not on PAPS, so that is where there is a gap. But if PAPS can do it and all of them can get onto PAPS, then perfect. If not, then we have to look for a regional bank to be able to do this for us. So that's where we are. We expect to launch it quite soon.
All right. Thank you for that, Winston. Just a final question to you. So, I mean, WACMIC is great, but you realize that on the continent, you have SADC trying to do something similar. ASEA has their own, and of course, SecondSTAX, we have already pioneered this and we are live. My question to you is how are we looking at the bigger picture? How are we thinking of bringing all these regional bodies together, to form one big association to just kickstart this capital market integration pan-Africa?
Great. I think when you look at it theoretically, it looks quite simple, but having spent these years on doing the WACMIC, I know that it is not simple at all. There are country-specific nuances. There are things you need to negotiate. More importantly, you have to get the regulators to come together, because you have to harmonize rules which will be approved by regulators. So imagine all the capital markets. Before we can achieve continental-wide, in terms of the model that we are looking at, you need to get all the regulators into one body who would agree that, okay, if you are given a continent approval, then immediately you are admitted into the market. I think it's not that as simple as it sounds. That is the goal. Hopefully, if one area is able to pull it off, it paves the way and it becomes simple for everybody to do it. And need I say that you realize that the Europeans are also talking about the same thing, they are also looking at it's become key on their top agenda now on how they would integrate their capital market. So the race is on. Let's see who gets it done. And I believe that once one person gets it done, the model becomes a case study, and it will give impetus to almost all the other regions or the continent to get it done quickly.
All right. Thank you very much. I think our time is fast spent, but let me just take a quick final round of closing comments from all my panelists. I'll start with Emily. Emily, before you give me your closing remarks, can you just briefly touch on the After Digital protocol? What is it and how it's going to, further improve the work of After? And then maybe you can just give us your closing remarks as well.
Okay, thank you. Thank you very much for that. And I think I'll talk about two very important protocols, the digital trade one and the intellectual property rights one. The intellectual property rights one is important also for the protection of all the innovations that you come up with in the financial sector, especially fintechs that are cropping up every day for digital payments and the like. And so to protect those innovations, we will do it under the protocol on intellectual property rights. Now, moving on to the protocol on digital trade. The protocol on digital trade is key and important for us all because of the fact that it lays the foundation for interconnectivity in the continent when it comes to e-commerce and also digital payments and digital payment inclusions as a whole. So it brings in components such as using mobile payments. Of course, that has been there for quite a bit, but now in a deeper process, you can now do your transactions, your capital market transactions. As Winston was talking, I was listening keenly. And if you already have forms of innovation, the foundation and the base that is being provided, even let's say for a product like PAPS, is going to be this digital trade protocol for cross-border trade. And just to say that it has also the key annexes that will be instrumental in terms of the backbone for your capital markets transactions, and that is the digital ID. So we will be able to have cross-border digital IDs for your clients and also for the institutions that will be doing the trading. Then you have the what we're calling the cross-border data transfer annex. And this annex is also crucial because then the regulators have to agree to send data, personal data across borders. And so that is also contained in the protocol. Another key element is the annex on digital payments and the annex on fintechs. So those already provide then the basis that these institutions that are coming up, the fintechs and also the regulators, to be able to use the annexes and the protocol as a whole to ensure that we can be able to trade across borders. And of course, it gives room for more innovation, even in the financial services sector, in terms of looking at what are the emerging technologies that are coming up. How do you ensure that you use AI in an ethical manner? And how does AI then support the work that we need to do when it comes to ensuring that we are dealing with human beings when it is necessary to deal with human beings, and the different aspects of AI to support innovation. So that, in a nutshell, is on the digital trade protocol. But let me conclude then by saying that, of course, for us as AfCFTA, we are looking at strengthening strategic partnerships and collaborations, and that is why we were happy to be part of this discussion today. We work closely with the PAPS Secretariat to roll out PAPS, and of course, by extension, the Afrexim Bank itself as a whole. And we look forward to ensuring that the work that we're undertaking in terms of harmonizing the regulations in the financial services is able to provide the backbone to take advantage of the opportunities that the AfCFTA is presenting to the citizens of Africa. Thank you very much.
Thank you. Nkechi, before you give us your closing remarks, or maybe let me throw in this question and then you can add your closing remarks. Nia, you want to know how currency volatility impacts cross-border investment and what strategies investors can use to mitigate that. In your former life, you wore a hat as a treasurer of UBU Group, so that's why I'm throwing this question to you. And then maybe you can also give us your closing remarks. Nkechi. Is Nkechi on? Okay, I think Nkechi has dropped off.
Sorry, I was muted. No.
Oh, okay.
Muted,
all right.
so
All right. Please go on.
I didn't realize. Okay, thanks so much, Ni, for the question. And what I would just say is that why we talk about currency volatility is really when we have the foreign currency on the other side. It's not as if our local currencies don't have that. But what happens, and why I say PAPS is very good, is that it's quite instrumental, is because there is a timely, immediate conversion of your currency to the local currency that you desire. So you're not waiting, because that's the problem. Currency volatility happens when people are not able to convert currency immediately. And by the time you wait for that available liquidity to be there, you would have taken a huge hit. And that's what we've seen happen across various markets, where companies are really suffering huge losses because of having to wait in central banks for currencies to come. But when it is local currency, that is limited. You know, the loss is limited as much as possible, because on the PAPS platform, what we do immediately is to seek, and I guess my closing remark will also be part of it, to bring in liquidity on that market. It is a matter of encouraging the informal sector. That's why banks are struggling. So once you have liquidity on that platform, which is why they're engaging people like AccessView as transaction partners, because we know the problem. And what we want to do is make sure that we bring in the informal sector, which is what banks can't afford to do at this point. Most of these trades, because banks have not been able to sort it out for clients, that are being done across the border. So we're bringing in those the informal sector onto the platform to help facilitate this. And that limits the currency exposure, even if what we're doing is not, it won't take more than 1-2 days to settle your currency. And that's being said, you will actually avert the currency risk, exchange risks that you're going to see. And that's really one of the good things about that. As far as I'm concerned, if I'm a bank today in this market, I'll be excited with coming on PAX. And finally, I love how Winston ended up to saying that the cash settlement is the main issue. That is always, with all of the integrations that we're talking about, is really for us to be able to settle the cash at the end of the day. Whether it's fintech, SecondSTAX, what you guys are doing is amazing. Looking at investors coming into various markets, in local currency. So someone in Kenya can easily terminate into Ghana if he wants to come into the Ghana capital market. And that is it, because without that platform, it won't happen. And that's why we need to really educate. And this is one of the good ways to do that. Educate the populace, the small businesses that I'm very passionate about them coming on the platform to actually aid and help them settle most of their trades that are hanging in banks because they really don't even have people paying attention to them to give them the effects they desire. Thank you.
Thank you, Pechi. Yeah, so at this stage, let's move quickly we have some questions here. I'll just ask our panelists and our speakers and analysts to have a quick go at some of the questions. Louisa, if you are still on, now Louisa from Ghana, can we zone in on some of the sectors or stocks to watch on the Ghana Stock Exchange specifically? And I think in your presentation, you mentioned the fact that T-bill rates are declined from the highs of 30s. We're now at somewhere between 15 or 17. It bodes well for the stock exchange, I guess. Can you speak to that a little bit as well? Hello, Na. If you are speaking, you are muted. Okay. I don't think nice one. Winston, since you are a member of the Ghana Stock Exchange, can you help us with that? Winston.
Yes, Daniel. Yeah. If you just repeat that part, the last part again of the question.
Okay. Yeah, I wanted to find out for our audience some of the key sectors or stocks to watch out for, especially on the Ghana market. And then also with the decline in T-bill rates, it should be good news for the equities market, shouldn't it? Offer them an alternative. Maybe you can touch a little bit on that.
Well, yes, I think that for this year, if you the graph, now show the graph, which just tells you the story. For a long time, the financial stocks have been trading at very low valuations for some time now, and it's not only a year or two; it's been 2 years plus. Remember that last year, even the financial index closed negative. So this year, we have seen that there's a huge rally on that side of the market. The challenges of DDEP, etc., are out of the way now. We are seeing their results coming through, and there are some very bold numbers that are being put down there. Everybody is almost in a billion cedi profit zone, which is a huge improvement. I mean, given the challenges we have in the economy. So definitely, I see that the financial side of things, despite the rally, if you look properly, you still see securities that still have low valuations in there. Is one of the key places to watch. The Treasury bill story is it's quite a different animal altogether, simply because it happened very quickly. The inflation currently is higher than what the interest rates are.
Yeah.
Naturally, you want to peg the returns to expected inflation, but the thing is that an expectation is never an actual outcome. So most people are cautious, and they want to watch that space carefully. But definitely the biggest pool of funds, which is the pension funds, are really in the market looking for alternatives. Alternatives, whether they can go out of this space, that means out of Ghana, to find deals to do. They are looking at what deals they can do in the PPP, venture capital, private equity, etc. And then naturally, they are already in the stock market, but the liquidity in that space has always been tight for some time now. So these are the blocks that any portfolio manager or investor will be juggling to find which one they will find something in there first.
Yeah, thank you, Wilson. I mean, talking about the pensions looking for avenues to offload some of their funds. I mean, the SecondSTAX portal is always ready to help with cross-border trading. As we've seen from some of the presentation, some of the markets are showing really good returns, and I think that's a space that we need to keep an eye on. But I have another quick question for you, Winston, from Ezekiel Cranton. Ezekiel wants to know what role do you envision blockchain technology and digital currency will play in facilitating seamless cross-border transactions?
Well, I think that for us, first of all, you have to remember that we work within a regulatory framework.
Sure.
Okay. So we've heard so much about digital currencies, blockchain, etc. But if our regulators, it starts with the central bank, it starts with the Securities and Exchange Commission. If they don't buy into it, if they don't push for it, if they don't make that available to us, it's always difficult to even start dreaming of using those technology in what we do. So currently, where we are now, it looks a bit out of our orbit in terms of the technology and innovations that we are considering to develop capital markets. But immediately it comes into focus. I'm sure we will jump at it, because for us, any technology that will make our lives easier as brokers, traders, and that would help us bring more investors into our pool, I'm sure we are more than happy to latch onto them.
Okay, thank you very much. I see a question from Esosa. She says the conversation has been insightful and she's interested in taking advantage of opportunities in Nigeria and other African markets. What are the first steps I should take to invest in those stocks? Well, Esosa, I'll definitely say reach out to us at SecondSTAX. We will guide you through the process. As I said, our portal is not just for equities trading. We have a KYC section where we will help you on board in all these three markets. We'll help you get the right documentations. And then our 15 partners spread across Ghana, Nigeria, and Kenya will help you to secure your CSD, Central Securities Depository accounts in all of these jurisdictions to help with the trading. So please get in touch. We will walk you, hold your hands and walk you through the space and help you to onboard in these countries and take advantage of some of the beautiful opportunities that are waiting for you in some of these markets. I see Emily has answered Kingsley on what AfCFTA is doing to enhance capital markets participation. They're working at harmonizing regulations for alignment across the continent to make it easier for cross-border trading. Yes, for those who are asking whether the presentation will be shared, definitely we'll make it available once we leave here. So I know we are 7 minutes off our schedule, but the conversations has been really interesting, and I want to thank our panelists for giving us such great insight into the topic that we put across. Extend our thanks also goes to our partners, Symbiat from Zcrest, Anthony from Faida Investment Bank, and now Louisa from Blackstar Advisors or Blackstar Groups in Ghana. So, as we say, we'll be coming your way every quarter with the cross-market conversations. We'll bring you market insights from all the markets, and then we'll bring you very exciting topics for discussion as well as we deepen the cross-border capital market trading. Closing remarks, we just say that just keep an eye out for the SecondSTAX Investor 101 program. We've realized that we get feedback from some of our participants that sometimes the terminologies are a bit technical for them. We've heard you, and we are coming out with an Investor 101 program, which will address all your investment needs, help you to understand and appreciate what is happening on the capital market, so you can also take advantage of all the opportunities that are available for all of us. Kindly follow us on our socials as displayed on the screen right now. Yeah, we are on LinkedIn, Instagram, X, and then YouTube. Yes, we have brought the third in the series of the cross-market conversation to an end. And as I indicated earlier on, we'll be sharing the slides and the recording with all our participants. We once again want to thank you all for jumping onto this webinar with us. On behalf of the team at SecondSTAX, we thank you all for tuning in and have a great weekend. We'll see you again at the end of second half or Q2 of the year for another insightful session. Thank you and have a good day. Bye.